What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at SoundHound AI stock, ticker symbol SOUN, on a variety of time frames in anticipation of the next trading day, Monday, March 18th. Alright guys, SoundHound stock here on Friday finished the day up 54 cents per share. That's plus 6.45% today. A pretty sizable day for SoundHound. However, in the context of the volatility of this name as of late, you could almost call this an average day, believe it or not. The stock is currently down about 10 cents per share in the after hours, but listen, as you'll come to hear me say a lot, take after hours with a grain of salt. The volume is very low, and it's very easy to bully stocks, as well as pump stocks, in the after hours. So, whether it's in our favor or going against our bias, we have to take it with a grain of salt. Now, let's get started here with our daily ritual, the volume profile analysis here on the 5-minute chart. First of all, if you have not done so already, please subscribe to the channel. I greatly appreciate it. My goal here is to hit 5,000 by Monday market open. I think we can squeeze that out with your help, so I appreciate you jumping aboard. Let's take a look. What we're looking to do here is pull out any bias, like hidden bias, right, that we can only get by looking deeper than the stock movement itself. So what do I need? I need three things. I need big changes in volume that are obvious. I need those changes in volume to correlate with big obvious moves in stock price, which we'll circle here. And I need all of that to be outside, well, really the volume on those moves, to be out of context for what is typically expected for that particular time of day. So the moves that I'm most interested in here are going to be this kind of rip after that quick dip off the open, and then this upside move here, and then the fade into the close. I'm going to kind of call those one move, that little plateau there. So let's take a look here and see if we can pull any interesting bias out of today's 6.5% green day. Now, just so you guys kind of understand what I'm looking at here, I typically expect to see a U shape for volume, okay, where it fades rapidly off the open. That first candle is often the highest volume bar of the day. That's not uncommon at all. That is well within context. So we can kind of ignore that one off the jump. And then we see a quick fade typically, a dip throughout the lunch hour in New York, and then a big, at least contextually speaking, pump into the after hours that usually ends up being about 1/3 to 2/3 the size of the open. So looking in the context of the two moves, or really the three moves that we circled, the volume profile on this first upside move, I mean, granted, we have 4 or 5 green candles that are out of context, but they're kind of all over the place, aren't they? We're seeing a lot of dips in between. Yeah, we got 2 consecutive, but then shortly after we have some, nearly as high red candles that are similar to the earlier green candles we got, kind of with gaps in between. I prefer to see 3, 4, 5 pretty consistently high consecutive volume bars to really get a feel for bias. And while there's clearly some little pops of bullish bias on that upside move that are a little bit out of context, to remain unbiased from my perspective, I can't say that there's anything incredibly obvious there, though I think even the untrained eye could see we had some little pops, just nothing definitive enough for me to make a call out on. Now, in this later part of the day, we did see an interesting 4 consecutive, or really 5 consecutive green bars, but 4 that were elevated into this upside move. And then once that move kind of topped out and we got a little bit of sideways movement on those red bars, consolidation, that volume started to taper off. Again, it's just not out of context enough, and it doesn't stick out like a sore thumb compared to the back half of the move with those couple of red bars. I mean, clearly in this kind of 5-minute bar time frame, the bulls were slightly stronger than the bears. But I'm looking for definitive, decisive bias, and I just can't really pull anything out of there. It's just not obvious enough. Now, you bears, this little fade that we got into the close, we got like a little fade and pop, right? Very, very contextual. Just kind of like a textbook slow grind higher into the close. This red bar, immediately after the open, guys, we did see a little bit of higher volume. This is more common to see really big volume on the first 5-minute bar after the closing bell, that is, on blue chips, larger market caps, And what I think that higher one volume bar after the close really is institutional rebalancing and fund rebalancing. And to me, there's really no bias to be had there. It's kind of just business as usual, because you can see that really no movement occurs from that once the volume dies out in the after hours. So let's move on here. Okay, we have to always look at that just in case there's something obvious. And even when there's nothing that really stands out, we can still pull little nuances out of the volume profile, and it tells us an additional story when we look at that as kind of a separate entity from the price movement itself. Let's move on here to the incredibly psychological self-fulfilling prophecy levels that I'm paying close attention to come Monday's open. Now, if you guys caught Thursday's video here on SoundHound, we talked about how we gave up that 50 period. Well, guess what? Here on Friday, we reclaimed. Okay, take a look at this. This was actually very interesting. Off the open, we made a push higher, a test, and rejection. The rejection was actually on lower volume. You see these volume bars down here. And then we got a little bit of increasing volume, a break upside through, a little bit of a retest on lower volume, and increasing volume on the pull away. Talk about a textbook reclaim, at least in the very short term. That's actually quite a positive reclaim in my eyes. But again, we're talking very short term, right? This is a very fast moving average. This can change on a day-to-day basis. And the 30-minute chart is a more zoomed in perspective that we're looking at here day to day. The only thing that I could have, looking at this, could have made this a little bit more favorable for bulls is had we done that closer to off the open to spend a little bit more time above that level. But I mean, we spent 5, 6, 30-minute bars above that level, which is, not a bad thing to see. So come Monday, bulls, any back test of that 50-period moving average, going to want to see, I don't mind whatever volume we want to retest on because we're already above that level, but just a hard high volume bounce back away, basically saying, yes, we meant it when we reclaimed that 50 period here on the 30-minute chart. And you bears, you guys have it a little bit more complicated come Monday. You guys would prefer to see a downside break of the 50 period on big volume as much as possible and as early in the day as possible, ideally. A lower volume retest and then a hard high volume break back downside to basically say we were not ready to reclaim that 50 period moving average on Friday. Now let's move on here and take a look. Is the 4-hour chart contextual day to day? And you can see here that it is grinding a little bit higher after today's move. Compared to last night, we were at about 630. Now that has moved higher and claimed about 655. Not a bad move. Understand that 50 period on the 4-hour chart is a much slower moving average than on the 30-minute chart. It takes time. Bulls. Obviously, we're not really ideally looking for a retest because that's a bit of a move away. I mean, it's in the mid 6s right now. The stock's at 881, or at least, as of the after hours. So bulls, come Monday here. Looking at the 4-hour chart in particular, what I'm really looking for is just a continuation upside. I would love to see that 50 period reclaim $7 a share, or just more so claim $7 a share. Get above 7. That adds an additional psychological barrier above a psychological round number. I'll take that, right? I will absolutely take that. Kind of a stair-stepping mentality as far as that downside potential protection goes. Bears, what you guys would love to see is ideally that 50 period flattening out. It's already claimed 650, right? Flattening out ahead of $7 a share would be a great thing to see if you're a bear. And that's really about all we can pull here out of the 4-hour chart without losing sight of the context of this video being primarily geared toward Monday. Let's move on now to the most important. If there is one chart you do not skip, the daily is that chart. Okay, this is the most psychological, the most contextual, and I think the most important chart of all, even day to day. Now, if you guys, again, caught Thursday's video analysis on SoundHound stock here, we talked a lot about $8 a share. We tested beneath that again, almost got down towards 750, held that area, but more importantly, opening below $8 a share, but holding 8 during the day, actually getting up and testing 9. Okay, that's a beautiful thing to see. Closing at 891. The obvious story now come Monday, right? These moving averages are completely irrelevant. I don't care about those. They're at 350 is the nearest one. That obvious story come Monday here on SoundHound stock is 9, right? Bulls, primary objective, reclaim that psychological round number of 9. Get up through on big volume. I don't mind if we retest it even a little sloppy on lower volume as long as we rip up out of that $9 hole on big volume. Now you bears, 9 is your enemy. 8 is your best friend. Any test of 9, reject hard, right? You want to hold downside of 9, get back down toward 8. Failed to hold it today, but ideally, you want this to be a $7-something stock as soon as possible. Whereas bulls, a reclaim of 9 is just one big psychological stair step of that ultimate $10 goal here in the near term. Now, something that I really think we should take a quick look at is the short interest data on this name. Someone actually left a comment and recommended that I take you guys through this, and I agree with them. This is very important, especially on a stock like SoundHound. So this is from February 1st to currently here on SoundHound. And that orange line is the most up-to-date estimated short interest, okay? Now, interestingly, we saw a little bit of a pop in short interest of folks trying to short down that pop we saw up to close to 20 bucks a share, or sorry, close to $8 a share. I was looking at the value for the short interest, right? And then we saw that short interest fade as the stock pulls in, okay? But now we're essentially even in terms of the short interest as the stock has pushed higher compared to when the stock was, down a $1-something stock. Here's how I gauge that. It feels to me like we're getting essentially an equivalent amount of shorts that are entering to short this pop as we're seeing getting squeezed out, because we know that we've seen shorts getting squeezed out. It's very obvious by the stock movement. But when you're in a name with a kind of like a short squeeze mentality, okay, or at least that's part of your thesis to be long, you don't really want all the ammunition on the other side to be gone after the pop, because now the thesis to the long side arguably becomes weaker if that was part of your thesis to begin with. But if you're a bull, you also have to consider that we're not really seeing short interest skyrocketing, adding a ridiculous amount of fuel, potential fuel, to that fire. It's kind of remaining stagnant. We're kind of seeing shorts cover or get squeezed more so, and then just kind of replace at the same rate. So I think you have to decide on your own how you feel about that and where you kind of want that short interest number to be, because it is a delicate balance. Now, let's take a look at my favorite part of the video here. The call put ratio. What was the bias today from options traders as we head in to Monday? Okay, so this is only from Friday here. We had just under 300,000 total contracts traded. That's a good sample size. We can get some good data out of that. 234,000 of those were calls, and about 64,000 of those were puts. Very heavy call side bias on the overall ratio. Now, if we move down to the delta ranges and we start breaking this down by kind of average time frame, that 0 to 20 range is the one that I'm really most intrigued by for the very short term. We have 26,000 calls in that range and about 23,500 puts in that range, which is very interesting because it's actually a bit more undecided in those out of the money short-term speculation contracts in that range, whereas the overall ratio is rather call heavy, right? Arguably very call heavy, but a lot of that's coming from the deeper, closer to at the money and deeper in the money contracts. Listen, before you head out, please leave a like. Also, don't forget, make sure to cast your vote in the comment section down below. Just comment whatever ticker you'd like to see me cover on Monday for Monday's wild card stock. Whichever ticker gets the most votes over the weekend's batch of videos will be the winner, and that'll be the wild card stock for Monday. Please make sure to subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.